Markets Now is brought to you by the 5-year anniversary of Brevant Seeds. Here's to 5 years of not just winning, but collecting one game-changing W after another. See all of our wins at brevant.com/wins.
And welcome to Markets Now. I'm Michelle Rourke with DuWayne, Bosse of Bolt Marketing out of Britain. And we are seeing a lot of red on the board this morning. Sorry you drew the short straw there, DuWayne, it looks like. But let's talk about this corn market. First of all, we have been pushing down into contract low areas. In fact, made that this morning in September corn. December corn is getting very close. Do we take that out? I mean, we need to hold these support areas here, don't we?
I would sure like us to see us hold these support areas. You know, last week I felt actually really good about the market, that I didn't feel like we had a lot of bullish news, but the market reacted fairly well. And we pulled back a little bit more than I wanted to on Friday. But I had felt like the funds had stopped selling. And that's the first thing we need in this corn market, is the funds had just stopped selling. And the commitment traders report showed, yeah, they sold some more, but not really aggressively. But then over the weekend, it would come back, and the weather models, those maps just are so non-threatening. Now we're talking about cooler temps and more moisture. There was a bit of a heat ridge we were watching last week, and that's kind of dissipated, maybe back in the news a little bit this morning. But I think that's the biggest driver of why we're down in the corn market this morning. Also following wheat, which is down hard too.
Yeah, I was going to say wheat is not helping the cause for sure. How big of a crop do you think the corn market is trading right now? There's certainly a lot of debate about that.
Well, there sure is. And I feel like I'm on a bit of an island, because I'm not the big high yield guy, at least not yet. I moved my yield from 179 to a 180 just this morning, just after driving more. And that's such a local thing. I was like, oh, the crop is dark green. We have had a lot of rain throughout the entire Midwest. So I understand the ideas of this high yield, Michelle, but I keep on going back to the acreage and thinking, ooh, we planted a lot more corn acres than normal. That means there's a lot more corn acres in fringe areas, which are sadly kind of my area of South Dakota. So it's hard for us to bring that average up, I feel. But I know you look at the crop conditions report, and you see Iowa rated as high as it is. I understand it. We couldn't get above a 180 last year, Michelle. So I really have a hard time thinking we're this 185 to 186, which is what I think the market's actually trading right now.
Yeah, no doubt. And we're probably trading these crop ratings here this morning. 73% good to excellent nationally on corn, down 1% from last week, but still up from the 68% last year. So the market's trading that. The frustrating part, DuWayne, is that you've got such good demand underlying this market. You get trade deals or frameworks announced, and the market just acts like it doesn't care.
I know. I had a client yesterday ask me, when do we shift from crop size trading the supply side in the US to demand side? And I said, well, you really could at any point in time here, because if people have this high yield expectation of 185, 186, some even higher than that, I feel like we're factoring in the biggest supply side. In demand, Michelle, demand's already there. Our weekly export inspections, in other words, what's been shipped out for corn, we're running 29% ahead of last year. So the price went low enough, the US dollar was low enough, we already found all that strong demand. So when I look at my S&D table with a 180 yield, my ending stock is more like that 1.52. It's nothing near like the 2.1 you would see with a 186 to 188 yield, something like that. So I've got a much friendlier outlook, stubborn, but I don't feel like I've been right either, because like you said this morning, September corn making contract lows.
Yeah, it is. Let's talk about the wheat market next, because as we said, wheat is influencing or pulling down corn this morning. But what's wheat's problem? We're well past 75% on winter wheat harvest, but yet we can't seem to bottom that market. What's wrong with the market right now? Is it this higher dollar? What is it?
I don't know. I wish I knew. I like how you asked that. You go, what's wheat's problem? Because that's what it seems like for a year for me, is like, what is your problem, wheat? Can't you come off the lows a little bit? I think it's tied to the US dollar this morning. That's the only news item I can really come up with that was that bearish. I mean, we opened up at 8:30 and man, we got slammed down 10 cents right away. So US dollar was up yesterday and today. I think it's kind of due to the US Europe trade agreement. And it sounds like we've got a fairly good deal there from the headlines I'm reading. So yeah, higher dollar always seems to put pressure on wheat. It's just a little bit frustrating, because when the dollar went down, it didn't seem like we got much of a rally off of wheat either. But that's the only news item I can think of as a currency issue.
Yeah, for sure. Okay, the soybean market is trying to come back here a little bit. We're about steady status right now, but that market has already been factoring in favorable weather or better weather here yesterday with the plunge, and we did have crop ratings that were up 2%.
Yeah, good crop ratings there. Got better in North Dakota, South Dakota about unchanged. I think the soybean market has to keep a little bit of weather premium still built in there. Our extended forecast is going into the first week of August, but that's a big month yet, and a big month, critical month for determining soybean yield. So I think we got to keep some weather premium. If you fast forward a month from now and we don't have a weather issue, we probably make new contract lows in November beans. But the same thing there, with less acres this year in a trend line yield, my ending stock is around 330, something like that. That's not horribly bearish either. So I find myself kind of stubbornly upset with the markets here. We didn't get what we wanted to have sold pre-harvest. Every farmer likes to have a certain percentage sold, but I'm stubbornly unwilling to sell at these markets at these prices because I feel like the supply and demand tables are more bullish or friendlier than the trade is estimating right now. So yeah, stubborn bull sitting in the Bolt marketing office here.
Yeah, and I think the big key here is, can we get something resolved with China, especially before harvest and our export window closes? And so we've got tax going on right now. We're very closely watching, aren't we?
Yeah, for sure. It would be really nice to see them come out with some framework agreement again, which I thought we had that once, Michelle. I mean, these trade headlines just drive me bonkers, but I've also read too that it's going to come down to President Xi and President Trump meeting. That's what will determine the actual agreement. So I guess in a couple of days, you hope these high-level officials break this meeting saying we've got the framework set in place for a presidential meeting, and then maybe we can get a deal signed. But in all these trade deals, ag has kind of been swept under the rug a little bit. Sometimes when you even see the ag numbers, they're going to buy less than they did the last 2 years. So I don't feel like they've been concentrated on ag goods, obviously, but I'm one that I don't think we can make someone buy something that's driven by supply and demand anyway. But I sure don't like it when we're at a trade war. So just get some sort of agreement in place, and I think you'll see China step back in and buy our soybeans.
Okay, let's hope. We're holding support where we need to kind of here, and hopefully we do. The one thing that's not being talked about that I keep going back to is soybean meal keeps cracking out new contract lows. How can you rally this market when that's the case?
Well, evidently you can't, because it's not right, and that's what we've always been trained to do. You watch soybean meal. A soybean meal led rally is a strong rally for soybeans. Now we're trying to flip and we're trying to crush all these soybeans for the oil. So this will be a new generational marketing change we're going to see. So soybean oil making contract highs and looks great all the time, but what are we going to do with all the meal here? I don't know if we can really feed more hogs. I think eventually what we have to do is export the meal out of here. But lately in the news, it's Argentina that's been exporting soybean meal to China. So that's not helping that market either. So I think you're right. Until we really learn what we're going to do with the meal, a lower meal market's still going to pull the raw soybeans down.
Yeah, plus Argentina has lowered their export taxes now, making them even more competitive in the world market, right?
Yeah, absolutely. That was a big news item over the weekend. It was kind of quiet yesterday about that, but that's a very negative thing. And it sounds like this isn't just like a so many month deal. They just lowered and said that's where they will be moving forward. So very good for the Argentina farmers, not so good for us here in the USA.
Yeah. The other headline this morning is about this railroad merger and, what implications or impact could this have on the grain markets?
I don't know. It kind of sounds like a monopoly to me. I guess I already thought the railroads were too large anyway, but the two companies merging together, I don't know if that means we get better cash bids like farmers are going to want, but it is what it is. That's kind of the economy and the economy of scale. That's just what's going to happen. So I don't know. Hopefully it means they can just get more trains out there, more transition, just get product moved.
Sure. Okay, cattle market pulling back after all-time highs again yesterday, and we just continue to see some profit taking, hedge pressure, and then we go back up. How long does this trend continue?
I don't know. I guess funds are long, they're extremely long. And if you look at like the feeder cattle, they've been record long since the beginning of this year. So to answer that question, they can stay long for a long time. And why not? It keeps working, right? Cattle on feed report, the cattle inventory report, nothing shows that we peaked this market. I do think we're starting to hold some heifers back, but that doesn't slow the market down in the short term. That's a long-term thing. Once you hold a heifer back, it takes a while to produce another calf from them. So, market looks really strong right now. I will say though, you're finally starting to see some news media pick up nationally. The price of beef is starting to get high, and to me, it's been a little high for a little while, but it's not high in the same percentage or the same aspect of what the futures market has rallied. So, but if the national media starts to run with that, Michelle, maybe these record long funds holding long positions just decide, I don't want to be long anymore and start to exit. But until that happens, this market looks bullish.
All right. Thanks so much for joining us. That is DuWayne Bosse with Bolt Marketing and Markets Now.
When you choose Brevant Seeds, you don't just win. You win so big, the very ground beneath your feet cries tears of joy. You win so big that second place feels like a participation trophy. You win so big, you might as well be harvesting buried treasure. Oh, sorry, just one more. When you choose Brevant Seeds, you don't just win. You hit the damn jackpot. Don't just win. Talk with your retailer or visit Brevant.com/jackpot to get started.